Hi guys. In this video, I wanted to go over my Robinhood portfolio. I've been investing for a little bit over 5 months now, and I just wanted to show off my portfolio. I have some growth going on right now today as the stock market is moving, and I just wanted to show you guys the overall stocks that I am currently holding. So without further ado, let's look at the growth. So for today, right now, I'm up $78 at almost 1% of my total portfolio. For the week, I'm up $671. That's 8%. For the month, I'm up $432, 5.29% of the portfolio. For the past 3 months, I'm up $629. I'm almost at 8% of my total portfolio. And for the year, I'm a little bit over 5% of my total portfolio. So I don't think that that's too bad. I have a lot of good things going and some bad. So we'll go over it one by one. The first thing that I wanted to talk about is right now I'm currently heavily invested in REITs, that's Retail Investment Trust, as well as some BDCs. Those are business development companies. So the REIT that I'm currently in is Apple Hospitality REIT. I don't know why it's acting a little slow. Give me a second. All right. So as you can see right now, I'm gained 14 cents on the dollar for today. That puts me at probably about $28. $28.60 return for today. The total, I'm up $368.46. So I'm up 10%. 10% for the year. And I'm getting a nice fat juicy dividend. The 15th of every month. As you can see, I'm getting $20 of dividends, just going right into, the Robinhood app, which I'm just reinvesting them in. I'm not currently reinvesting it into Apple, which was my initial plan. But I don't like to give up the gain. So I don't like to give up like my total return. As you can see, my average cost, I bought it at about $17.40. So I know that the valuation of the company, they have the company value between $27 and $38. But if you can see, it's never been there. This is, I think the highest it's been at, in its 52-week trend has been about $20.19. So I really don't want to buy into anything, especially with the market treating the Retail Investment Trust so bad. People are saying right now isn't the time to own a REIT. So I've kind of just let it work for me. Let the dividends just keep producing me money, and my total return is steadily growing. So that's my first stock that I own. The next stock that I own is Gladstone Capital. This is a BDC. I have 165 shares. The average cost is $8.77. My total return is I'm up $54.35. And the same thing. I'm not buying into it unless it drops past that $8.77 threshold. So I'm not going to continue to buy into the company. I am receiving dividends of about $11.55. I have one pending right now. The end of tomorrow, actually, I should be getting a dividend of $11.55. So the same strategy is being applied to Apple. The valuation of Gladstone, I believe, is between $11 and $14. That's what a lot of analysts are saying. So I don't know where it's going to actually go. If you look at the 5 years, it's up $3.93. I don't think it's ever hit $11. I think that the 52-week high is at $10. So I don't think it's ever hit that true valuation of what the company is valued at. So moving on to the next stock, I have 154 shares of PSEC at $6.74. Now this company, a lot of people loved this company at the beginning because I think it actually paid a dividend of, I think, 11 cents at one point. And this last year and a half, they've been slashing their dividends in half. Like I think the dividend that the dividend that is paying out is 6 cents per share. So I think that turned a lot of investors off. I think their dividend yield was at one point 11%. It's still there. They still have a high dividend yield. But they were paying 11 cents, and their stock price was about $8 or $9 when they were paying that, and people sold off, and I believe sold off really hard. The stock dipped like around $4, like $4 or $5. I wasn't investing during that time, and I think I would have picked up a bunch of shares when that had happened. So my average cost is $6.56. So I don't think I'm doing too bad there. My total return is I'm up $28.41, as well as receiving a dividend. I just received a dividend of $7.08, and I believe the amount of shares that I currently am at, I will be receiving a dividend next month and going forward of about $9. So, following with the Apple and Glad strategy, I don't want to invest into it until it goes underneath that 6.5 threshold. So I'll just be collecting dividends and just reinvesting those into companies that I believe in. So these are the companies that, I'm receiving monthly dividends on as well. Apple, Glad, and PSEC, they're paying out monthly dividends. So, I'm, like I said, I'm using that added with the actual money that I'm putting into my portfolio every month to help accumulate more shares of product. So moving on, I'm going to actually skip the CRF. That's Cornerstone. What is this? Cornerstone Total Return Fund. I don't have that much research. I didn't do that much research about it. That's why I only have 6 shares of the closed-end fund. I've been using an app called Stock Twit, and just gaining the knowledge there because I can't really find that much about this total return closed-end fund. I do know that a lot of people on the Stock Twit were saying that the valuation of the company is a little bit under $12. So as you can see, people are kind of overpaying for the stock, and the reason why people are overpaying is because of the dividend payout that is paying out right now. It's paying out 23 cents of dividends for each share that you own. So I think that's why a lot of people are currently buying into the company. I just only have about 6 shares of it, so I'm not, too heavily vested into the company. I got it when it dipped below 15. So right now it's at $14, and my average cost is $14.95. Total return of $41. That's that. But my biggest holdings that I've been investing in is a marijuana company called Cron. It hasn't showed me that much success. So right now I'm going against my strategy of buying retail investment trust and BDCs for averaging down on the cost of Cron. When I got into the stock market, this IPO had rolled out. This was going to be the first weed company from Canada to be listed on the New York Stock Exchange. And I wasn't familiar with how, the stock market treats IPOs. I thought that I was going to be getting it at a bargain in price as it, just started out, which wasn't the case. The company had, when did I buy into it? I think it rolled out February 25th or something like that. And I brought into it. I brought into it 3 days after it initially rolled out. I brought it at $8.55. I bought 24 shares, and a couple days later, it just started shooting up, and I was like, man, I just got to buy me more Crime, and it shot up to $9.27, as you can see, and I got 26 more shares, and then I thought it was going off to the moon. March 5th, it shot above $10, and I brought it at 10.07, and after it hit 10.07, it just was on a steep decline. I'm just going to show you exactly what's going on. What's that? 3 months ago. So, it was up right around here at this 991 mark, and it just was on a steady decline. So what I'm kind of doing is I've just been buying up shares while I've been up on my True Strategy. Just to average down the cost, the cost is now at $7.15. That's shaved off about $2 of the average cost, in these last couple weeks. So I've just been trying to eat at it. And I do know that Canada will have a vote for their third and last vote for whether they're going to legalize recreational marijuana in Canada. And if that happens, I expect this stock to skyrocket. So, this is just a risk that I'm taking. I know that this isn't the true nature of how I want to attack the stock market, but I look at this as, if my ancestors had the opportunity to invest in alcohol or tobacco, you know what I mean? I don't want the buck to pass me up any longer. So I'm just throwing some money at it and just seeing how that works. So Sprint now, this was the first actual stock that I invested in, and it hasn't been doing too well. When I first looked at the stock and did my research, I noticed that it was always stagnant. It's never moved. It practically never moved in the last 2 years of really investing in it. I know that it moved a little bit when they first got wind that they were going to try and do a merger with T-Mobile. And then, when that went off the table in October of that year, it shot back down. So in December, when I first bought my first share, I thought I was buying into something cheap, and I thought it, would, essentially do things. This is when I was naive and didn't really understand how the stock market works. I just brought into it, and it's just been stagnant. Now they are, they are working with T-Mobile to have this merger happen. We're just waiting on the approval from the courts, and we'll see what Trump says if he'll let this go through. But I don't know whether when I'm attacking the stock market, I'm really just trying to accumulate shares. I'm not really trying to sell them or anything else like that. But this doesn't pay out a dividend, or it doesn't do anything for me. It's just like, holding my money. So I don't know whether to wait for the $6.50, cost that T-Mobile said they were going to buy the stock at, or if I should just, just cut my losses. I'm only down $23.16 on it. And then the last shares, Chesapeake Energy, Groupon, and Zynga, were stocks that I got from the referral program that Robinhood offers. If you refer someone to Robinhood and they used your link to sign up, they'll gain a free share. So what I'll do is in this video, I'll drop a link for our referral. So if you want to invest in Robinhood, you can get a free share along with me. So I'm currently at 1.38% on the day. So I'm happy that I showed off my account. If you guys have any questions or comments or recommendations, just let me know, and I'll get back to you. Thanks.